Breakouts in the Forex market are like the fireworks of price action. They're explosive, they get attention, and if you catch them at the right time, they can deliver some of the biggest trading opportunities. But here's the thing, not all breakouts are created equal. Some are powerful and clean, while others are just traps designed to wipe out traders who got in too early. That's why understanding the best chart patterns for spotting real breakouts is absolutely key. One of the most reliable patterns out there is the triangle. When price starts forming higher lows and lower highs, that's a symmetrical triangle. It shows that the market is consolidating and pressure is building. Eventually, that triangle has to give, and when it does, the breakout can be fast and powerful. What you want to look for is volume kicking in and price breaking through the trend line with momentum. That's usually a good sign the market means business. Then you have ascending and descending triangles. These are a little more directional. An ascending triangle has a flat top and rising bottom. It usually signals a bullish breakout. A descending triangle is the opposite and often breaks to the downside. These patterns work great because they show clear areas of resistance or support getting tested multiple times. When that level finally breaks, the move is often decisive. Another classic setup is the rectangle. Price just bounces between two horizontal levels, like it's stuck in a box. But once it breaks out of that range, especially if it's been building up for a while, it can move hard in the direction of the breakout. The trick is to wait for confirmation. You don't want to get faked out just because one candle popped out of the box. Flags and pennants are also great patterns for breakout traders. These usually show up after a strong move, and they look like the market is just taking a quick break. A flag is more like a downward sloping channel, and a pennant is tighter, like a mini triangle. When price breaks out of these patterns, it often continues in the direction of the original move. These are high-probability setups, especially when paired with the overall market trend. But recognizing these patterns is only part of the puzzle. You also need a way to confirm the trend, avoid false breakouts, and find the best pairs to trade. That's where tools like the Apex Trend Indicator come in. While the focus of this video isn't about any one tool, it's worth mentioning because it gives traders a clean, visual confirmation of trend direction. If you're seeing a bullish triangle forming and the indicator confirms an uptrend, that's one more reason to take the trade seriously. What makes breakout trading so exciting is the potential for fast, high-reward trades. But it requires patience, discipline, and the right confirmations. Don't just chase every breakout you see. Focus on the patterns that repeat across the market: triangles, rectangles, flags, and pennants. Combine those with a trend confirmation method you trust, and you're already way ahead of the crowd. At the end of the day, the market will always give us patterns. Our job is to recognize them, wait for the right moment, and strike with precision. The more consistent your approach, the more consistent your results will be. Thanks for tuning in to FX Limit. If you found this video helpful, give it a like and subscribe for more tips on mastering the Forex markets.